how do you solve that without litigation? The first thing you might want to do is be prepared to just write a check and be done with it and move on. But this was too big. We didn't have that kind of cash.
Right.
So we approached it from the standpoint of litigation, but we do it smart. We don't do it with a vengeance or with anger. We just do it as a tool to get to a solution. Same thing with issues on the property. Just focus on a solution.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Glenn Hanson is an entrepreneur. He started and funded 25 companies from plastics manufacturing to aerospace, fintech, banking, medical, and real estate. And today he's got multifamily real estate with $1.4 billion in transactions. Glenn, welcome to the show.
Hey, thanks for having me. Appreciate it, Sam.
The pleasure is mine. And every guest who comes on the show asks the same three questions, which are, where did you start, where are you now, and how did you get there?
In terms of real estate or in terms of business?
Oh, and I left one part out, in 90 seconds or less, wherever you like.
All right. So I started in a family business when I was came out of high school, and I latched onto that as a machine tool maker, and I grew that business with my brother from 73, and we sold it in 1999, and we grew it from 9 employees to 400.
Wow.
So it was significant in size. As a result of that, I retired at 47, 2 years past my targeted retirement goal, and I bought a Bell Jet Ranger helicopter, flew it around the country, got bored, and I called it my Winnebago in the sky. And I got bored, so I started funding startup companies in 2001 and did that progressively for several years. And then one of the companies I started was a roll-up of pet crematories. And that's where I was reintroduced with the concept of scaling a company and focusing on the segments of success that I found, which is that the company can't go to China, wildly profitable, scalable, doesn't need skilled labor, and is recession-proof. Multifamily investing, apartments, real estate fit that formula. So that drove me into the real estate business on scale. We my wife and I, we had bought 2 families for 20 years prior and never made any money at it, aggravated with investors, with the tenants. So we never saw that as a place to go in business. So we learned about scale. We learned about the industry. My experience up till 2008 when we started gave me the skills, I thought, to dig in and grow the real estate company.
So you started investing in multifamily in 2008? Is that what I'm...
Yes. Yeah.
And that, of course, was right when everything was just, going, the markets were going south in a hurry. What gave you the confidence then to say, hey, look, I think this is an excellent place to be and we need to be buying? Yeah.
So 2008, September, when I launched the business, the Lehman Brothers was still in business. A few months later is when they fell apart and the world tumbled. And as a result, I was funding 25 startups. So I was feeding a lot of capital into multiple companies in different industries. So I recognized that I didn't have enough bandwidth to maintain that. And so some of those would have to be jettisoned or find their way without me. And I had to find a source of significant capital to satisfy my lifestyle. And the pet cremation business I mentioned earlier was ongoing, and I had operators there. We sold that in 2016, but I was able to focus on the real estate business. And what gave me the confidence was the experience in the past, recognizing that recessions pass. I never anticipated that the downturn was going to be what it was. So it was 3 years from the date I started until we bought our first deal. And the first transaction was a $35 million property. And the irony there is we bought it out of receivership, General Electric, and they wouldn't even let me bid on it because I didn't have experience. So I said, I may not have experience, but I know how to run a balance sheet. And the guy you took it from had experience and he failed. So maybe you could give me a shot. So they said if I could show proof of funds, they would let me bid on it. So anyways, we did that, and we got a shot, and we won the deal.
Wow.
That got us started. Yeah.
That's
It was a big deal.
heck of a first start. I mean, most people who are buying their first multifamily property don't start with a $35 million one, let alone one in receivership. How did you know? Obviously, you got a significant experience in business, but how did you know, hey, this is even a good deal?
Yeah. So the first thing I did was I hired a fellow. He's still with me today, and he's a partner now. But I hired a fellow that worked for a competitor in the area that had scaled a real estate empire to 25,000 units, and he was an acquisition person for them. And so he came on, and he knew what to do. I did not know. It was his doing that created our success for sure.
That's amazing. That's amazing. Yeah, you're bringing on talent from another organization that has the industry experience to say, hey, this is what we should be doing.
Yeah, yeah. It's all about the team, right? And even today, what we do, I guide the team, but I'm not the expert in any segment. I've got people that have come from the industry and know what they're doing.
Right. That's amazing. Yeah, I think one of the words that you used, or two words that you used before we kicked this off, was something you said, programmatic scale. Can you give some more color to that?
Sure. In my tool and die business that I scaled to 400 people, its statistically average size of the company in that industry is 10 people.
Wow.
And to give you an idea that what can happen, and through the process and the disciplines, when I say programmatic scale, is that what you need to do is set the goals in place, get the team involved, and then believe your own story that you're going to do it. And then you have to talk it up, share it with other people tell people what you're going to do. And what happens is the dream becomes bigger than life for the people involved, including myself, and you build momentum. But inside of that building of scale, you need systems and procedures, and that's the hard part. And we're struggling with that today. I mean, we have significant amount of properties under management, and we use third-party managers. We have to manage them tightly. It's for us, it's worked, and we're in multiple states. So programmatic scale is what that's all about, what I just described. Keeping that into control.
Absolutely. Yeah, I've heard somebody say that problems never go away; they just change.
It's all the same. Yeah,
right.
Yeah,
right. I think every entrepreneur wants to solve all the problems on their desk, and then it's like, well, by the time you make it to, I guess you guys are at 1.4 billion in assets under management, you're still going, oh wait, there's just different problems.
Yeah. Well, we don't have 1.4 billion under management. We've sold this. We've gone along. We have about 500, probably 500 million under management. But we've traded, and like I mentioned, our average levered IRR is 37% on the portfolio. So, and no losses yet.
That's absolutely fantastic. I love that. You said earlier that you have really, it sounds like, developed a formula for success. Can you talk to me about that? Yeah,
I can. That started in 1991 when I read Stephen Covey's book, 7 Habits of Highly Effective People. And I started running my company using those strategies. At that time, I had 27 direct reports, and I trained all of them myself, and the procedures and systems, and provided the manuals and the books that we all carried every day. And we followed that discipline, and that's the magic for me of being able to scale.
Got it. When you think about your over the course of your business career, what are some things that maybe you didn't get right or that you did wrong that you could help other people avoid repeating?
Wow, I did a lot wrong. Shoot, that's let me think. Wrong.
Or a mistake you made that you said, man, I could have avoided that.
Yeah. Well, litigation. I've had litigation that I could have avoided. And I would say that when I started this business, my attorney told me he knows people in it, and the first thing they do is set aside a budget for litigation. And it's too easy to get caught in the ego of litigation. And I would say today my view is run from any litigation.
Okay.
It's just not worth the time, money, or emotional stress. So that's probably the most current. I mean, what else can I share?
Well, yeah, if you can give some color to that, I mean, because there are people, obviously, they're scaling their portfolios. And when you say, hey, set aside a budget for litigation, is there, and I'm not asking for particulars necessarily, but is there a scenario or something that you think of when you say that, you say, hey, here's a way either to avoid it, something you could have set up differently? Was there, was it just, some of the crazy stuff where we hear where somebody got shot on your property and then they, family suit?
Yeah,
I mean, is it?
It ranges from property issues and more directly to the financial community. For instance, we had a closing that a property didn't receive the payment at close to pay the taxes from the seller. So a lien was put on the property by the state, and we had to go back and get the seller to give us the money. They wouldn't do it, so obviously that leads to litigation, right?
Got it.
So how do you solve that without litigation? The first thing you might want to do is be prepared to just write a check and be done with it and move on. But this was too big. We didn't have that kind of cash.
Right.
So we approached it from the standpoint of litigation, but we do it smart. We don't do it with a vengeance or with anger. We just do it as a tool to get to a solution. Same thing with issues on the property. Just focus on a solution.
That's that's great. That's great advice. Yeah, and those are things that, I mean, some of those you just can't avoid. It's like
you can't. Yeah, they show up.
They show up. Yeah, and that's really interesting when you said, hey, just start setting aside a budget for it, because it's, at some point when you get enough assets under management, enough people, enough property, it's probably just bound to happen, is what it sounds like.
Yeah, by the way, I didn't say set the budget aside. It was my attorney when I started the business told me that would be a good idea. And I'm thinking my brother and I ran 38,000 contracts over 30 years, 35 years. And we had one one incident of litigation, and that was it. So I said, we're not going to have any litigation. Well, the real estate industry seems to attract it.
For sure.
Yeah. So beware.
Absolutely. Absolutely. And there are things that are beyond your control. I mean,
there are.
People I gave earlier, I've known some people who've had, violence happen at one of their properties, and suddenly they're being dragged into court. And it's like, wait, I had nothing to do with this. And yet here I am. How did I get here? This is great.
Right.
So that's wild. You talk to me about funds. You guys have multiple funds that you're running now. And I think earlier we talked about what you called 7 years of struggle, maybe.
Yeah, sure.
Talk to me about that.
We started out 7 years ago to raise $150 million in an LP fund. And I hired a Series 7 employee that came from a large institution, had raised billions of dollars, and she was unsuccessful. And it was largely due to the fact that we were a first-time fund. We couldn't get any traction, and especially at $150 million. So along the way, we tried different approaches, and we failed. And then along the way, we converted it to a GP fund, and we lowered the amount that we wanted to raise to $10 million. We were able to get traction on the $10 million from our own family and friends to get started and break escrow so that we could go ahead and continue the raise. And we raised $20 million for our first fund. And that $20 million, we bought $380 million worth of real estate. So that we were able to, as a GP, take a GP piece, right? That's what the fund was. We were able to leverage that money to a significant amount of real estate. So Fund 2, which we're in the process of raising now, is a $30 million fund, same model. And we launched in January, and we're at $15 million raised so far. So what I learned from that is start small and make sure when you start, you can hit your target, even if it's $5 million. And then that gets confidence, credibility out there. I also learned that they're very expensive to manage. There's a lot of regulation around the administration and accounting. So that's perhaps why people don't want to get involved with somebody doing a first-time fund, is you don't realize when you start how much work it is outside of running the real estate empire. It's almost its own company. Keep the fund going.
Right. Tell me the transition. I just want some clarity around. You said you started it initially as an LP fund and then said,
Right.
that's not working. Let's move it to a GP fund.
Yes.
Can you
Yes.
clarify that for me?
Yeah. So LP would be a different part of the stack, capital stack, than the
Sure.
GP, right?
Sure.
So the GP fund funds only the GP piece, which has the higher risk and higher return. So our fund documents say that we're targeting a 25% internal rate of return and an 8% cash on cash. So you can do that when you're in the GP stack.
So when you guys come in, you're coming in because obviously, if you set aside, let's keep this easy numbers here. And I'm sorry if I'm getting into the weeds on this, but let's say it's $1 million raise, and just again making this easy numbers. That is the limited partners' equity, but then the general partners may be throwing in $500,000 themselves. So then maybe the total,
right.
And so you guys are coming in. So the total raise, let's say it's 1.5. You guys are coming in as the $500,000 GP side.
Yeah, we have to participate.
Right.
The fund is considered liquidity we can use. It's considered capital that we control. But they still, to this day, they still want me and my partners to put money in the game.
Absolutely.
So,
absolutely. And with that fund, are you guys going out and acquiring your own assets, or is it something where you're working with other general partners to go and find deals?
No, that we own all the assets.
Got it. Okay.
Yeah.
Very, very cool. I like that. And then also, so I guess on that front, then how are you guys funding the limited partnership side? Is that something where you're just going out and just raising one-off investors one at a time? Yeah.
So prior to this interview, you sent me a list of asking me what's the hardest thing I've ever done, and it's raising tens and hundreds of millions of dollars worth of capital for what we're doing today. That is the hardest thing I've ever done. And we're out there. We're hard on a deposit. We don't have all the money yet, and we've got to perform. And out of 37 transactions, there's only one time we couldn't close. So we've been successful, but it is not easy, Sam. It's hard.
It is absolutely hard. Yeah, I think people underestimate how difficult raising capital can be. I always just say it's like herding cats. It's getting everything done and across the finish line, everybody signed, everybody's money, and everybody wired. It's like, man, this is a lot like work.
It is real work. But yet after you get going, it's the easiest thing I've ever done once it's operating.
Right.
Try running a machine shop with 400 people and 1,800 custom parts. That's pretty tough.
This becomes easy, I guess, at that point. That's absolutely incredible. Tell me about that one deal. I'm really curious. What did you learn from the deal you couldn't get done?
Yeah, so we were working with aggressive money, which we seem to find occasionally. Not always. They're disingenuous in terms of their approach. You've probably heard loan to own.
Yeah.
So we've run into some of those kind of targets, and we were short $1.8 million on a $36 million deal, and the capex budget was $12 million. So it didn't matter that we were short 1.8. We could have continued raising the capital after.
Sure.
But they wouldn't let us. They said if you don't have all the money, we're not closing. So we couldn't close.
Can you clarify that? Who wouldn't let you close? I mean, certainly.
Yeah, the partner that was putting up the cash, right? What happens is the game is once you sign with these guys, they're exclusive. So you can't go out and get competitive money while they're controlling your calendar, right? So you get to the end, and if they decide they don't want to fund, what are you going to do? You haven't been able to talk to anybody else. So you either better have $12 million to take their place, if that's the number, or you're forced to give up the deal.
Wow.
So,
well, that's a risk I think we should all listen and learn and avoid. That's the thing that I wanted to share with everybody is be careful who you pick as your partner when it comes to finance. I mean, you have to be sure they're genuine, number one. Number two, are there Satan clauses inside their contracts that are going to trip, or are there trip levers where they're deliberately targeting, an opportunity for themselves? And you want to watch for that. And as we scaled the business, we got exposed to a lot of people
And most are fine, but there's always somebody that's trying to take advantage of the newbie coming into the game.
Yeah, that's a painful lesson learned. I think, like I said, a painful lesson learned the hard way. I mean, that nobody wants to be in that position. How would you identify that money partner like that now? How would you pick them out of a crowd?
Yeah, you can see it in their term sheet. When they send the term sheet over, you can see the language will jump out at you. If it makes you cringe and your stomach feel upset, then you found it. It shouldn't be that. It shouldn't be hard, right? It should be. They want to do a deal with you. They want to make it work. Obviously, if you break certain rules or you can't pay your bills, they've got to take over the property. We get that.
Right.
But
it'll be right there in the term sheet. I like that.
Yes. You can see it. You can see it right out of the blocks, and then just guard yourself against it, and don't accept exclusivity at that point for sure.
Absolutely.
Or what we've been able to do is write in a breakup fee, and if we don't like it the way it feels as we get into it, we pay the fee and find another partner.
Interesting. A breakup fee. That's that's very, very cool. I love that. Thanks for taking the time to share that with us. One last question here for you. The markets are crazy. Multifamily has experienced incredible cap rate compression. We've seen prices going wild. Where do you see risk in the multifamily market right now, if you see any? And then how are you, protecting yourselves against that?
Yeah. So I was during my stint of retirement, I traded my own book of business in commodities. So I traded the indices and everything else you could imagine. And I learned that nobody knows where it's going to go. Sure. So I think the biggest risk is by not continuing with your business plan. So we're still buyers. We've just found a better way to finance, and we couldn't do it the way we did 3 months ago. We had to change the way we looked at the capital stack. But the risk is that people are pulling in their horns thinking the world is going to end. And the reality is that people still need a place to live. The Democrats or Republicans support housing, and the interest rates will come down. And as long as we're buying cash flow, which we are, so what? We just have to wait.
I like that. And that's what I keep hearing over and over right now, is that as long as we're buying cash flow, who really cares? So that's absolutely fantastic. Glenn, thank you for taking the time to come on the show today. Certainly learned a lot. It's been a very interesting interview, just from your history in the tool and die business and growing that to, as you called it, programmatically scaling your real estate holdings. You've done some really cool things, and I think learned some hard lessons that you were willing to share with us today. So thanks for helping us avoid those mistakes ourselves. Certainly appreciate it. If our listeners want to get in touch with you and learn more about you, what is the best way to do that?
Yeah, reach out to colonyhillscapital.com.
colonyhillscapital.com. We'll make sure we put that there in the show notes. Glenn, thank you again for coming on. Certainly appreciate it.
Yeah, thanks for having me. I appreciate that too. Take care, Sam.